Hey, welcome to the Daily Stock Review. Today we're going over Woolworths Group. The goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor on the journey, 2,500 hours in over the last 7 years, and sharing the lessons along the way. Today we're just going to jump straight into the stock analysis. This is my investing process, so I'm going to scout for prey, where to look, do a 5-minute check before looking deeper and spending more time on the business to see if it meets my basic criteria. Learning off these guys, they had a pretty good track record for just a little while and they smashed the market, so I want to emulate their success. All right, let's jump straight in. So where did I come across this stock? I'm in Australia. I go to the shops. Well, pretty much we've got almost a duopoly of grocery shops to buy from. One's Woolworths, the other one's Coles, and to a lesser extent there's Aldi and a couple other small ones. But the two main competitors in the marketplace is Woolworths and Coles Group. So what I want to do is I just want to have a look around. There's always a lot of hype about these businesses, price gouging and things like that. So let's actually go through the financials and have a look. So reports and data, or the 2025 latest. Let's just jump straight in that one. You can see that it came out last year in August. So if 2026's one will not yet be out as well. All right, so a lot of these reports, because this is an Australian one, it's not in the 10K format. So it's a lot more design and effort has gone into the media of the actual PDF itself. And you can get lost in these numbers here. Let's not do that. And let's just dive straight down for, we've got along the side here, performance highlights, business review, director's report, financial report. Financial reports, all I really care about at this stage. Because you can, it's a lot easier to nitpick other figures that make your business look rosy versus actually having a look at what's going on under the hood. I'll just zoom in because they've got a split PDF. Consolidated statement of profit or loss. So this is our income statement, or also known as. And what I want to what I want to do is look at the top line, and then look as we go through, and then look at the bottom line. So revenue, so money that they got from customers during that period. We've got 2 last years, and they're doing it in weeks, so 53 weeks versus 52, which makes it a little bit tricky to compare both years. But 67, is this in millions? Yeah, well, let's make a radical assumption. Yes, there it is, millions. So 67 or 68 billion and then 69 billion. How much did that cost? So cost of sales was 49.50. Gross profit was 18 billion for both years. Other income, branch expenses, administration expenses, earnings before tax, and profit before income tax expense, and then profit for the period. So out of all that, how much money did it make? Well, according to this, the previous year they only made 117 million from 67 or 68 billion dollars, which is peanuts, and 69 versus teeny bit less than 1. So doubling that, it gets us to about 2, so it's almost 2% net profit for the period, if I can do my maths right. So let's move on from that. That doesn't look too crash hot. In my process, really, I'm looking for, has this business mastered its customer? Does it have a moat around it, which we can tell in the financials? Does it have pricing power? And then having a look at the management. So in the cash flow statement, we can see a lot more detail in terms of, are they allocating the funds of the business to the best places? A statement of financial position. This is also known as the balance sheet, because the current assets minus the liabilities equals equity. So they have to balance, hence the name. So cash equivalents. Let's just go first up, total assets compared to total liabilities. So they've got 33 for pretty much both years, 28 for both years. So there's a small increase there. What about current versus current? So 6 compared to total current of 7, compared to a total current of liabilities of 12 for both years. So cash equivalents is pretty light on hand. Trade and receivables, inventories. So trade and other payables is significant. So a lot of this business's money is literally just stuck in stock movements and managing those and managing payments to suppliers. How'd we go for, I'll look at that in the cash flow statement. What about equity? All right, cash flows. So we've got receipts from customers, payment to suppliers and employees, net cash provided by operating activities. Pretty light compared with the amount coming in, but effectively they're just a Woolworths, along with selling their own products. They have their own, I guess, white labeling branding under. Most of it is logistics and holding the warehouse to be able to sell them. So cash flows from investing activities, property payment for property, plant, equipment. So it's always going to be fairly significant. They want to maintain their stores, maintain their equipment, and it looks like it's very consistent. Net cash used in investing activities. Okay, so there's nothing crazy here. Coming in and out. Repayment of principal, component of lease liabilities, proceeds from borrowings, repayment of borrowings. So when you roll over some debt into another one. They've also got dividends paid. So it is paying a small amount back into shareholders' pockets. So just under pretty much 1% of the net or revenue that comes in and out. So overall, so looking at this business, does it pass my filters? The answer is no. Yeah, it is, even though I know that it is in a duopoly, doesn't appear that it has a significant moat. Like a lot of its products, and obviously finances here, looks like a very commoditized service offering. It may have been different in the past. They may have had what I would expect to see, especially in the income statement, is to see a lot more margin in the business coming through to the bottom line. and that would show us that they have a lot more pricing power. But this case, they're bringing in a lot of money and only letting out a little bit, which is peanuts compared to other businesses that are on the market to be able to invest in. Yeah, do they provide a dividend? Yes. Is it relative to the price? I'm not even going to bother because this doesn't fit my criteria for the exceptional businesses that I'm trying to look for. It may do for you, but it's not for me. How's the stock price going? Well, going back to 1999, knowing that they have been paying a dividend, so we wouldn't really expect this business. They're not ploughing a lot of money into growth and growing stores at an exponential kind of rate. They've been allocating that money back to shareholders. So for over a 25, 26 year period, the business hasn't grown much. Especially for all the talk, the over, from me growing up to the last 16 years out of school, and looking at it going, wow, this is not really the narrative that's been played out in the media. So if you like these quick reviews of businesses to be able to see if things are worthy of investment, or just an insight into how I'm doing it, click subscribe. If you have any questions, comments, and things like that, or any other businesses that you think are good businesses to look into and you're interested in, feel free to add them into the comments as well. I'll read them through and hopefully inspire the next video. If there's anything else that you come up with, feel free to give us a comment and I'll go and review those in coming videos as well. Otherwise, have a great day and I'll catch you in the next vid. This next one that's coming up, YouTube reckons you'll like it. Cheers.